Hi there, Year 11. I'm just going to go through with you how to complete exercise 2.39 on page 192 of the textbook using our 10-column worksheet. So your first step is to record all of the accounts listed in order of revenue, expense, asset, liability, and owner's equity. Okay, so reading through that list, you will go through and you can either list next to them which one they are, or you can just go through and pick them out. So if you pause the video now and have a go at that, then you can check whether yours is accurate with mine. So I'll do one that I've prepared earlier. As you can see, I've recorded all of my accounts in order. So we've got revenues, and then our expenses start about here. Then we've got assets, blah, 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 to liabilities, and then finally capital and drawings at the end. So as you can see, my totals are both equal and they match to what was in the question. So far so good. Your next step is to do your balance day adjustments. So if you look down the bottom, there's some dot points. So it says, first one, amount of $76 of cartage outwards is prepaid. So if you see prepaid, you can assume that that is most likely going to be a prepaid expense. So down the bottom here, I'm going to have to insert some new columns, new rows, sorry, to make room for our balance day adjusting account. So first up, you'll put in your prepaid expenses. So prepaid expense, we know, being an asset, it will be a debit. So we debit the $76. Therefore, the credit needs to come out of cartage outwards. So we'll go over here and we'll credit oops, not that far. And we'll credit $76. Okay. So if I drag this across, this little formula, you can see here. Let's drag it across from here. That these are matching. Okay, so we've got debit and credit. Let's have a look at the second one. So insurance expense is paid for the quarter beginning 1st of June. So that means that our insurance expense of $900 includes June, July, as well as August, because it's a quarter, which is 3 months. So therefore, 2 months is prepaid. So July and August are prepaid. So that's $600. So down in prepaid expense, we're going to make this a formula. So we're going to say equals 76 plus 600. Okay. And obviously, because we're at 30 June and we don't want to account for the prepaid amounts, we're going to credit insurance by 600. Okay, we're still balancing at the bottom. If we then look at the third one, accrued rent expense is $200. So that's going to mean, if you see accrued and expense, it's going to be an accrued, spell it correctly, accrued expense, which we know is a liability because it's something that we have to pay in the future. So that amount is still owed. Okay, so it's $200. So that means our rent expense, we need to debit, once we find it, there it is, increase our rent expense by the $200 that's owed. Fourth stop point, rent received in advance is $1,000. So if you receive an income in advance of actually providing a service or providing that space for rent, it means it's unearned. So we use our liability account unearned revenue. We'll record that $1,000 in the credit side. What that means then is that we find rent revenue, we need to reduce it. So because it has a credit balance, we'll debit that account. Okay, so we're still balancing. These are all matching up. Debits are equal credits. Okay, finally, you've got commission revenue earned but not received. So we haven't been paid commission, but we have earned it. So that's your last type of account, which is an accrued revenue. Okay, this one being an asset will mean that we will debit that account by the $200. Oops. It also means that we need to increase our revenue by 200, our commission revenue. So as you can see, the $790 is about to increase. Okay, so that's the end of step 2. The next step is to complete an adjusted trial balance. Okay, so all this is copying it straight across, so you can put in your equal sign and click on the amount from your first and second columns. So essentially we're just combining the unadjusted trial balance and the balance day adjustments into the adjusted trial balance. So if, for example, we look at our commission revenue, we had a credit of $790 originally, but then we've also credited it when we did our balance day adjustments. So 2 credits means we add them together, giving us a final balance of $990. Okay, the opposite thing's going to happen here with rent revenue. So we had originally had a balance of $12,000. We've now debited the account. So if you've got a credit and you then debit it, you're going to minus. Okay, so we've now got a balance of $1,100. So a similar idea with the cartage outward. We have the bigger number being the debit is our balance. Debit that, and we've then credited the account in our balance day adjustments. So we minus the $76. Okay, so all you have to do is continue down all the way and then just adjust for those items. Oops. Adjust for the items that have a figure in our balance day adjustment column. So here you've got insurance. So remember we spoke about 2 months being prepaid, so we have to reduce the amount we could claim now. Okay. So I'm just going to pause and finish that, and then I want you to check that you've done the same thing. So you should pause at the same time, and we can go through. Okay, as you can see, I've got those all in there now. So I've adjusted for the ones that have combined these. So you can see here, I've got a little calculation in there. And of course, for your new ones down the bottom here, they're going to be the same because we didn't have anything in our unadjusted trial balance for those. Okay, so that's pretty much the hardest it's going to get. Once you've done that, you're on the downward run. So income statement and balance sheet are in 2 last steps. If you've got your accounts in the correct order, this should be a really easy step. In fact, you should be able to just copy and paste up all your revenues and expenses into the income statement and then do the same thing for assets, liabilities, and owner's equity into your balance sheet. So we know an income statement is revenues minus expenses. So if I just Control C that, copy those, and then right click to paste them, and I just paste the figures, the values, because if I paste normal, it's going to stuff up the numbers because they're formulas. So I do the values, put those in. If I scroll down the bottom, it's not matching. Why is it not matching? Because revenues are higher than expenses. So this figure is actually representing our profit. So same thing with the balance sheet. If I select all of these guys, I press Control C, and then right click to paste and just paste the values. There it is there. See how they're out by the same amount? One's positive, one's negative. We're going to balance those off by including another line called profit and loss. It should say profit and or loss, but we'll just stick with that. So in this situation, we'll put 246,625 to the debit side. And then we just make sure that this is calculating correctly. You can now see that they balance and that equals 0. If we do the same thing on the credit side, 246,625, again, this is now balancing. So we've got our debit and our credit, everything's balanced, we're happy. We're completely finished with this exercise. That is as hard as it gets. Okay, so in your exam, you'll have to do this as is there. So I've just spent 9 minutes, maybe a little bit longer with a few pauses to get that all sorted. Then the next thing you have to do is a formal income statement and formal balance sheet. So you'll be given a couple extra tabs in your exam which have those templates in there. So it's just a matter of then copying the information in the correct order and format of an income statement and a balance sheet. And that's the whole exam. Pretty straightforward. The only tricky part is that you won't be told these debits and credits. You'll have to figure those out based on the accounts. Anyway, I hope this helps you and makes it a little bit easier to do your homework tonight.